Hey all, welcome to ShareTreck. Today is Sunday, 27th of February 2022, and what I have for you in this video today is going to be a brief technical analysis of the VIXN and the NASDAQ and a few other indices. I'm also going to talk about all the various factors that are at play in the market right now, both positive and negative, and use that to justify what I think is going to happen next week. So if you are interested, please hang on and let's get started. Okay, let's start off with the VIXN, which is where we always do the analysis. Let us go to the 1 year time frame, which is what we are all familiar with. Out here, if you recollect, I had mentioned that this diagonal line, green line, which was the resistance for the longest time, is now going to become a support. So the good news is that we broke down from that support yesterday. And we also broke down from the support of the 9-day and the 20-day EMA. So they are no longer supports. They have all become now resistance for us. So I'm going to turn this green line back into red. And our next support is going to be the 50-day EMA, which is this green line. And also this diagonal green line, which happens to have been the support for us for quite a while, starting from as early as 3rd of January 2022. So that's what we have here. So if I were to look at the MACD is turning over the signal line and getting bearish, and the momentum is falling. However, let us go to the 1-day view and have a look at what is happening on the 1-day time scale. So if we look at the 1-day time scale, of course, all the exponential moving averages are now providing resistance. That's a very good thing. The momentum is raising out here. And the MACD is still bullish, even though the signal line is moving up. It will take some time before the MACD on the short-term time frame starts crossing over into over the signal line and getting into the bearish side. So we still have some steam left in the short-term maps on VIXN, short-term charts on VIXN. Let us look at what is happening with NASDAQ. So if we were to go into a 1 year time frame, where each of these candles is 1 day. So you can see that in the last 2 days of the previous week, Friday and Thursday and Friday, we have had handsome gains, very strong gains on Thursday, and relatively less gains on Friday. However, the good thing is that the 9-day EMA is now a support for the NASDAQ, and that 9-day EMA stands at 13630.99. So if by any reason we were to turn back, we can expect a little bit of support out there before we fall down. So that's a good point to note. The next resistance for us is going to be the 20-day EMA, which is standing at 13861.90, and that is this orange line out here. And if we look at the MACD is turning over onto the signal line. It's trying to go to the bullish side, which is a good sign. And if you look at the RSI, it's also turning and going upwards. It's increasing momentum. Both of these are very, very good signs. Let us go to the 1-day time frame and have a look at what is happening here. So if we go to the 1-day time frame, where each of these candles is a 1-minute candle, you can see that the MACD is running in parallel with the signal line. If you look at the last 2 bars of the histogram, they are almost equal size, which means it's going in parallel. So it's kind of flatly bullish. And if you look at the momentum, it's also going parallel to the signal line. So it kind of indicates to me that we are going to have a sideways movement. Another way I can look at it is that the momentum and the MACD is not as strongly bullish as it was the previous day. So if you can see, what this basically means is that the MACD as well as the momentum is not as strong as it was when we got our initial break, which was on Thursday, where we jumped up so high, and also on Friday, the bullishness was a bit reduced, but still it was pretty bullish for the recent times that we have seen. But going forward, the same momentum does not seem to exist in both the charts. If we were to look at S&P 500, again, it's the same story out there. Very bullish on Thursday, still bullish on Friday, but it's not looking as bullish when it comes to Monday. So that's my observation out here. And now let us do a bit of a consolidation of all the factors at play in the market and try to determine what's going to happen on Monday or for the following week. So then the question becomes, what is going to happen next week? So in my opinion, if we take a summary of every factor at play right now, so here are the factors to recap. Ukraine-Russia conflict, so there is a potential peace talk somewhere along the border of Belarus between a delegation from Russia and from Ukraine. There are also protests going on within Belarus, according to social media reports and news reports, where the local Belarusians are protesting against their own government for helping Russia to invade Ukraine. So that is going on, and there's a lot of resistance happening within Ukraine. All these are going to come to a head sooner rather than later, and that may all happen and unravel next week. So we have to watch for any negative catalysts from there. In the background of all this are the real risks. The Fed tightening is going to come to an end, and we might see the first interest rate hike in March. And March is just around the corner. Today is 27th. So Monday 28th and Tuesday onwards we are into March. And the question is whether the Fed is going to do a 0.25% hike or it's going to be a 0.5 hike. The jury is a bit divided. There are some hawkish analysts who are talking about 0.5, and many are saying that it should be 0.25 because the Fed will be very cautious not to rock the boat too hard. And the fact that Russia-Ukraine conflict took place is in itself giving them some support in their tapering, and they may not have to increase the interest rate that high. So we'll have to wait and see what happens. Personally, I think it's going to be a 0.25 rate hike. Also, we have high oil prices, which are feeding into inflation. The oil price hike or inflation in oil prices is very, very, very dangerous for the economy because it feeds into everything. Because if you are looking at your grocery, it's all going to be transported from somewhere, from a farm to your place. So to do that, you need gasoline. If it's a question of transporting furniture from the warehouse to the store or from the factory to the warehouse, again, you need to have gas, and if gas becomes expensive, the cost passes through. And in many cases, gasoline is used for production purpose also. So all those places will find a hike in input costs, and to a certain extent, the companies will try to avoid passing on the cost to the client. But at the end of the day, companies run for a bottom line. So sooner rather than later, they will start passing on the cost to the end users, and that's going to push inflation, which is already at a high of above 7%. So it's very dangerous for politicians when interest rates go high, because the population is going to be absolutely upset, because whenever they go to the gas station or the grocery, they're going to feel higher prices. And so it's not in the interest of politicians. And that will also put a lot of pressure on the Federal Reserve, requiring them to act fast. And that's why I think we'll still have a 0.25% interest rate hike in March. We also have the supply chain issue, which is persisting. Orders are taking longer to fulfill. Up here in Toronto, I think yesterday I went to buy some furniture, and I needed to buy a dining table and some chairs and a sofa. So I found what I wanted. I liked it. I went to some big stores, and everywhere, whichever unit I liked it, it's going to be delivered only on 1st of May, even if I order now. And they would not sell the floor unit that's on display in the store, because they want to use that to sell those units. So it was very disappointing. I went to 3 big stores, and in all 3 of them, that was the situation. And whatever is available for immediate delivery are the things that people generally don't desire, and those are the slow-moving items. That's what is available. And also, one of the other thing that has happened in the local news out here is that Loblaws, or President's Choice, which is a very big supermarket chain out here, had to break ties with Ruffles Lays. These Ruffles Lays manufactures potato chips, potato wafers, as you may call in, or crisp as you call it in Europe. But they wanted to increase the price. The Lay's people wanted to increase the price of the chips, and President's Choice wouldn't have it. So they are no longer stocking those chips. So things like those are happening around, and everything's got to do with the increase in gas prices, and also the supply chain issues of transferring produce from one place to another, raw materials from one place to another, and finished products from factory to warehouse and warehouse to store, and from store to consumer. Everywhere that's a problem. And on top of that, we still have a trucker strike which is heading towards Washington against the mandates. So if we look at the entire mandate issue from a hospitality industry point of view, the most battered sector was hospitality and entertainment, because theaters were empty, restaurants were empty, restaurants could not do any business, and they had to generally become a takeout kind of venue, despite having a huge space to accommodate chairs. And for them, it's very important that we do not have another wave of virus and another wave of lockdown, because many of them are almost close to shutting down their business. It's been terrible. And also for the workers who work in these industries who get tips when they wait tables, those people have not had income. So for them, it's very important that we have no more variants and no more lockdowns. But the trucker strike is pushing against mandates, and if mandates were removed prematurely, then there's a good chance that we may have another wave. Also, school children have been suffering a lot. So it's a very, very conflicted situation to be for the mandate or not to be for the mandate. But overall, the truckers heading towards Washington creates in my mind a similar situation like what we had in Ottawa, when the truckers camped there for almost 15 days, and it was very difficult for all the residents. The situation is now resolved, but what is going to happen in Washington with the trucker strike is something I'm concerned about. And also the ripples of the sanction that Europe and US and UK have levied on Russia is going to ripple through the economy. The gas which is pumped from Russia is hitting the homes in the European countries, both Eastern Europe as well as West Europe. So the people are going to feel a pinch in the pocket, and the banks which have been prevented from taking part in SWIFT are not going to continue with their business with their European counterparts. So Europe is likely to face more of the pain, and US is likely to face a little bit of that which is flowing through, because Russia is strong on gas and commodities like palladium and other metals. Palladium was very important at one point of time for, I think, automobile industries. If I'm not mistaken, it's used in the catalytic converter, which is essential for unleaded gas to be used in cars and to reduce the pollution. But given the fact that a lot of EVs are coming up and increased oil price in this current market where already car prices are high, is going to push a lot more easier adoption of the EVs, electric vehicles. Therefore, the palladium impact might be on a diminishing scale, but still it will be felt. So overall, this is what makes me feel that what we have here is a relief rally. Potentially, if we look at our NASDAQ chart, let me go back to the charts. Give me 1 second. So looking at the VXN, so first probability is that it may bounce off this 50-day EMA line, which is the fluorescent green line, which is at 29.43. If not, it could bounce off this diagonal straight light green line, which has been a support for this pennant for the longest time. And that would happen to be tomorrow at around 29.32. So we are likely to have the VIX bouncing back up again anywhere between 29.43 and 29.32, that narrow range. And in which case what it will do is it will go up and it will be constrained by the diagonal red line out here, which has been our resistance for the longest time. So that's one possibility of what could happen tomorrow. If I look at the NASDAQ, let us see what we can glean from the NASDAQ. So I have drawn a line here in the bottom linking all the lows. So just let me adjust this a little bit here. So this is much better. So if I link all the low points, then I get this line, which I am deeming to be a support. So we ended at the support on Thursday, and from there I have drawn a line upwards, signifying that if we end up going on an upward trajectory and if we break out of this downward channel, what needs to happen is that even if we come down tomorrow, we need to bounce off either this support line at 13,336.65 or this support line the day after at 13,175.20 or maybe on Wednesday somewhere around 13,067.56 and then go back up again, and then we'll hit this resistance somewhere around Thursday, and maybe we come down back on Friday, or maybe we go above this and start forming a new higher high and a higher low and track along this green line. So that's also a possibility. So the chances are very high that on Monday we may open up high and then come back down. So that's where I think we seem to be like, because as I mentioned, there are so many of those risks that are unwinding, and we still don't know what's going to come up from the Ukraine-Russia meeting along the Belarus border. So that's about it for today, my friends. Thanks and have a great day. I hope you had a great weekend. Please don't forget to put a like here. And if you're here for the first time, please consider subscribing, and we would like to have you in our community. Bye for now. See you tomorrow.